Hi everyone, my name is Manasi Gucci, and the reason I'm shooting this video is I would like to teach some of the people who are planning to to run a future business, and they need funds. In order for you to run a business, you need funds, and in order for you to have funds, you can either get a loan from the bank, or you can get a loan from family member, or you can get a loan from some people you don't know who are willing to invest in your projects. All right, and in order for this to be possible, you need what we call a financial projection. This is exactly what I'm going to teach. I'm not going to be only focusing on theory, but I will try to be as practical as possible. First of all, let me introduce myself. This is my background. You can see that there on the notepad on the screen. I am a financial analyst. I am an MBA in finance, and I am a financial analyst. I've been doing that for the last 7 years, and I also design financial modeling for small and medium companies. I am also very good at investments. Talking about the different type of financial security and how you can invest your money and how you can expect a return on your investments, and what are the different security you can purchase in the markets in order for you to be able to generate profits. And also I am very good at banking, explaining the different banking systems and what are the different banking tools to make your investment more profitable. But on this video, I'm going to be very specific. I will discuss about financial modeling and what is the importance of financial modeling, and we will start building financial modeling from the scratch. I will help you how to build your own financial modeling using Excel and how to present it to any investor. This is the purpose of this video. It's an educational video. There is nothing about politics, nothing about social here. It's pure educational. So here, first of all, I need to tell you guys that there are three very important things that investors are expecting. All right, any investor in the world, including yourself, when you invest your money in any projects, you are expecting what we call ROI, which stands for return on investments. All right, the money we invest, all right, in other terms we call it capital, or we call it principal. This is the money you take from your pockets, you take from your bank, you invest in any project, and you have what we call interest. The interest is a surplus. You have invested, for instance, 100 US dollars and get 120. The 20 is the interest, all right, and the 100 is the principal, what we call principal. So any investor is expecting to get, first of all, his principal out, and second, to get an interest. That is what we call together a return on investment. Right? So here, investor, whenever you want to present any project, please keep in mind that there are three various areas that investor want to see on your projects, and you need to be as very descriptive as possible about those areas. The first thing is the business description. Investor want to make sure that your business is as specific as possible. They want to make sure that you know what you're selling, what is it that you're selling to the people, which country you're selling it to. Are you doing an e-commerce business, or is it a physical store? What are you selling exactly to the people, and what are your audience? What is the age audience? The age of the audience. You need to be very specific. You need to describe what are you doing exactly and in which area you are operating. All right, this is the business description. This is the first thing. And in other terms, we call it business overview. All right, where you present different activity, how it's going to be running on the ground. And the second point, which is very important, which I'm going to be putting most of my focus on, is the financial statement or financial projection. In other terms, we call it assumption. Many people use this term most of the time, assumptions. All right. The financial projection will show to the investor how you are going to return their money. Anybody will want to give you money. They will want to put money in your business projects, in your business plan. But the point is, how are you planning to return that money to them? This is the main question. And not everybody will trust you verbally. Most of the people want to trust you when you show them a scheme, how you're planning to reproduce that money, how you're planning to use that money in order to yield extra or surplus, so you'll be able to return the money, you'll be able to return the principal, you'll be able to return the interest. Anybody want to see that? So you need to be very smart how you're designing financial projection. When we're talking about financial projection, we're talking about financial modeling. All right, it's financial modeling, and this is the topic I'm going to discuss with you today about financial modeling. And the third and last thing here is the marketing strategy. All right, I'm going to give you a brief picture about all the point number 1 and point number 3, how you can make it, but I'm going to be very much focused on financial modeling. We will start from the scratch. We will be using Excel tools, how to build a financial modeling for your business and to show to the investor how you can present to the investor. So this is a complete package. It's free. There is nothing to pay. I just thought that it would be a good idea for me to share my knowledge bases with other people who might be using it in a very important field of the business activities. So financial modeling. What is financial modeling? Financial modeling is nothing but a business tool, okay, that helps all right. This is my personal definition. You will see so many definitions on internet, but all have the same purpose. It's how you're gonna design. It's about the design, how you will design the cash flow, how you're gonna return the money of the investor, how that money will come back, how you're gonna yield the profits which is expected. All right, this is the main definition. Please keep in mind, I'm not going to be very I will try to be, I will not be very complex. I will try to be as simple as possible, so that you will understand from scratch. And this is for this is for beginners, people who have no knowledge, no background about finance. I'm going to start from the scratch, from zero. All right, from ground zero. So this is exactly what is a financial modeling. It's a business tool. All right. So financial modeling specifically will focus. There are 3 very important statements that is expected. This is the outcome. After drafting a financial modeling, there will be an outcome, the result. The result is what we call the statement. It's a projection. This is the final result. And this is exactly what investors want to see. Even yourself, if you're running your own business, you also want to see what will be the result, what will be the projection, what will be your business condition after few years to come. All right, and for this I'm going to open Microsoft Excel so that I will be more specific as possible, hoping that you know how to use this tool. But it doesn't matter even though you don't know how to use this tool, but I'm pretty sure that through this video you will get some basic knowledge also how to use Excel, Microsoft Excel, in building up your business. So I'm opening up this one. All right, here we are. So we have 3 different very important statements that your investor want to see. All right, we have the first statement. I'm going to mention it here. The first statement is what we call the balance sheet. Sorry, I'm using external keyboard, so I might be a little bit slow in typing. This is a balance sheet. What is a balance sheet? I'm pretty sure you have heard of it. You have seen it somewhere. In French language, we call it bilan. All right. So many people have seen it somewhere, but they do not know exactly how it operates. What is the role of a balance sheet on a financial statement? Please remember, first of all, we have financial statements. Okay. Balance sheet is a part of financial statements. Alright, the first financial statement is the balance sheet. What is the balance sheet exactly by definition? Alright, by definition, balance sheet is nothing but balance sheet is only a picture. Alright, I guess all of you knows what is a picture. A balance sheet is a picture of the current position of a company. The picture of the current position of the company. Let's just take a simple example that we usually face on our daily routine, and just assume you're going to the hospital. All right, you go to the hospital, you gotta get an x-ray check on your chest, something is going wrong, and they're just gonna put that device on you. That device will scan your chest and see whatever is going wrong inside your behind your chest, and after that they will print out. There is one document they will print out in plastic document which will show the x-ray results. Alright, then you will see the current status of your chest. So it means that you will see what is wrong with you at that point of time, or you might also be able to see what is good with you at that current point of time. This is exactly what is the balance sheet. It shows what is good or what is bad at a current point of time. Balance sheet does not talk about the past, does not talk about the future, but it's talking about the current point of time. Alright, the actual time. Okay. Just give me a minute. I got flat because my battery is about to go off. Alright. So, in business, what do we need a balance sheet? When presenting our plan or business plan to investor, what do we need a balance sheet? We need a balance sheet simply because investor would like to know what will be at one stage, at one point of your business, at one period of your business, what will be your current position. Current position will show the cash position, means how much cash you have in the bank account. It will show, apart from that, we have what we call, let me just forget about cash, asset position, and liability position. I will explain what is this. Alright, what is the asset position? When we talk about assets, what is an asset? I hope all of you heard of an asset. In French language we call it un atout, les avoirs. Alright, what is an asset? For a business to run, business needs assets. We have two types of assets. Alright, just remember this. We have a fixed asset and we have current assets. I will explain you, just don't worry. What are the fixed assets? Assume I would like to start my business. All right, I will be, for instance, what type of business I can do. I will be manufacturing computers. All right, I will be manufacturing computers, and I need assets in order to start that business. So first of all, I need fixed assets. All right. Assume if I'm planning to buy a building, or if I'm planning to build a building. All right, it's two different things. If I'm planning to build a building, I need to buy land first. All right, so this is my first asset. I'll buy land, then after buying a land, then I will build my building. What would be the value of my building, a monetary value of my building? This is what I'll mention here, building. All right. Then, apart from building, those are fixed assets. What are fixed assets? Fixed assets are the assets, long-term assets. It means once you have purchased that, you don't need to purchase it again. You don't need to purchase it in any near future. It's something that you use for long term. This is what we call fixed assets. All right. Then you have land, you have building. Sometimes you have also machines. If you're gonna buy some machines or robots, whatever it is that you'll be using. All right. Then you have equipment like chairs. All right. Like tables. Okay. Like stationery, like pen, papers, and all that. All those are equipments. And machines, like for instance, if you need like some robots, you'll be using some robots, and you'll be using some so many type. I hope you understand what is machine. All right, anything that is robotic, that has a mechanism is inside to transform a raw material to a finished goods. This is what we call machine. All right. Okay, those are the different type of asset. There are many other, but just put in mind that asset is anything that has to do with long-term investment. All right, fixed assets. Then you have current assets. Current assets are the tools or are the asset that you are using on a daily basis or on a monthly basis. Those are short-term assets. The first current asset is cash. All right, you need cash every day to make machine running, to pay people, to buy for inventory. Anything you're buying, you need cash. All right, this is the most current assets. Apart from that, what other current assets you might have? You might have also money in bank. All right, cash in hand and money in bank are two different things. All right, bank account. This is also an asset. Apart from bank account, what are the assets you might have? There's so many current assets. Let me just focus on this. All right. And liabilities. What is a liability? Liability is nothing. Liability is only the money you owe to people. The money that does not belongs to you that you have to pay back. This is what is called liability. All right. And liabilities, what type of liabilities you have here? You have fixed liabilities. All right. Then you have a current liabilities. All right. As a fixed liabilities, all right, the most important fixed liabilities is nothing but what we call equity. Equity is nothing but the capital. Equity is the money that investor put in your business. You understand? When an investor decides to give you money, he gives you $100 to make your plan work, or to just launch your new business plan. He agreed to put the money inside. Then this is what we call equity. All right, that money is an equity. It's a liability. It's not your money. It's the investor's money. All right, this is what we call equity. And we have current liability. Current liability can be like loan. For instance, you have taken a loan from the bank. All right. This is an example of your current liabilities. All right. So I hope this was very clear. I hope I have explained it very clearly. Please just remember, this is the first financial statement, which is balance sheet. Balance sheet is made of assets and liabilities. All right. It shows the current position. If the land is worth, for instance, let me just put the value here so we might be a little bit more specific about what we're talking about. You have purchased land of 100,000 USD. Okay. And the building, after building, the value of the building, for instance, is 200. Means that the total value of the total value of your premise, of your building, whatever it is 300. All right. And the machine, you have purchased machine for 50,000. All right. And apart from that, you have purchased equipment of 50,000. Those are just random figure. All right. Then you have in cash in hand. Remember, all this value I've mentioned here, you don't have them in hand. All right. Those are the value of the land, the value of the building, the value of the machine, and the value of the equipment. All right, that you have invested. This is how you will explain your investor how you're going to spend his money. All right. And then you have a current assets. Remember, all these are long-term assets. All right. Then you have a current assets. All right. Then for the current asset, just look properly here. You have cash in hand. This is what you have in hand. Assume you have 50,000 cash in hand. You have 50,000 in bank. All right. So these are your total assets that you have. All right. And then you're gonna sum it up to know exactly what is the overall value of your assets. Just look here, you have 500. All right. It means that the total value of your assets at that particular point of time is 500,000 USD. All right, 500K. This is the total value of your asset at a particular point of time. All right, it's showing the asset position. Now, assume if tomorrow I'm gonna sell my machine. If I sell my machine, this was for today, the total value was 500. If tomorrow I sell my machine, I lose my machine, I sell it, then I have no more machine, then my value on tomorrow will be 450. This is the current position. It's the position of my, this is what I explained you from beginning. Balance sheet shows the current position at a particular point of time. It can change anytime because it's a balance sheet. Let me put back in the previous position. All right. Now, liabilities. Please remember one thing, very important. On a balance sheet, your assets, total assets, must be equal to the total liabilities. Hope you're getting my point. On balance sheets, the total assets must be equal to the total liabilities. All right. Like I told you from beginning, liabilities is made of equity, which is investors' money. All right. Assume investor have given me 300. All right, and I have taken loan from the bank of 200. Getting my point? Then the total here will be okay. I hope you understood my point. You can see assets is equal to liabilities. Please note something. You cannot spend the money you do not have. You will get this money, then you spend it here. It must be equal. All right. Assume I have spent 450K. All right, and 50K of cash is left. Then I will put the 50K on the cash balance. All right. The total must be 500K. All right. If I have spent less here, for instance, if I have put 30K only here in bank account, then probably here it should be 70K in cash, because the total must remain, all right, because the total must remain equal to 500K, which is the money which has been which investor has given you and the bank has given you. All right, this is what you're spending. You're spending what you have. Also remember that equity might be also the money from your own pocket. You have invested your money, so you owe to yourself money. All right, or it can be also the money from outside investor. This was about the balance sheet. On the next video, I'm going to discuss with you about the second statement. All right, the second statement, which is income statement. and after that we will discuss about the cash flow statement. All right, all these are what we call financial statements. All right, all this will make our financial modeling, and then I will explain, after giving you a brief explanation about these three different statements, we will start building a financial statement from zero. It's a very complex steps, but there's some complex steps that you have to take there, but you would get to know at the end that it was very easy, and it's very helpful. If you know how to make it, you can present your project and people will be attracted to your project, and people will be willing to put the money in your projects. As long as you have a good marketing plan, you have a good a good product to sell. Thank you very much for watching this video. Looking forward to making more video in future. I hope you had a great time. Thank you.